Hi, my name is Daniel Kertcher, CEO and founder of Trading Pursuits. This is a general market recap for the financial markets for October 2012. Now, before I get started, I just want to quickly share with you a few disclaimers. Number one, what I'm sharing with you today is what we call general advice. Furthermore, I haven't taken into consideration your personal financial objectives or needs. Trading involves risk. Now, nothing I talk about today is to imply a trading idea, though if you choose to trade, you take your own risk at doing that. And finally, my company, Trading Pursuits, we hold an Australian financial services license. Okay, so let's start talking about the overall markets. The first thing we'll talk about is US earnings. And as we can see here, we're currently coming into another US earnings season. And so far, out of the top S&P 500 stocks in America, about 117 or so stocks have actually now made their earnings announcements. And what's interesting to see is that we're getting about 4% higher earnings, that is, greater percent profits than expected. In other words, 4% of all the companies have made higher than expected profits. Now, this is a pretty strong indication of the current market because we've gone through about 20% of the overall top 500 companies. And to see this good result so far statistically means we're probably likely to see it for other stocks as well. Now, we've seen this trend now for the last 4 years, where every quarter, when companies come out and make their profit announcements, they're outperforming analysts' expectations. Now, why is this? Well, basically because analysts are under-predicting. They're underestimating how far and how well they think companies are going to do. Now, this is a bullish sign because it means that companies are outperforming the market. Profits are higher than expected. This bodes well for the general U.S. economy. Now, here's the S&P 500 index, and what we can see is that the value of the S&P 500 index now is trading about 1,440 points. It was trading around 1,460 just a couple of weeks ago, which was the highest level it has been since around March 2008. So we've now completely recovered all the ground lost by the major collapse following the global financial crisis, and particularly the Lehman Brothers crisis in September 2008. The highest level the S&P 500 has ever reached is about 1,550 points. So we're only just over 100 points shy of the all-time record high. So the S&P 500 is arguably booming away. It's now risen over 114% in just the last couple of years. This is one of the fastest growing times, percentage-wise, of the S&P 500 of any time period in history. Now, if we zoom in a little bit, though, we can see that the current market for the last few weeks and months has basically been going sideways. It's been volatile up and down, but generally going sideways. And this is not surprising because we have a major announcement coming up in America in just over a few weeks. And that, of course, is the U.S. election. Now, you'd be forgiven to think that Barack Obama would likely win the election up until a few weeks ago, but if you've been watching the U.S. presidential debates, you probably noticed that Mitt Romney did particularly well in the first debate, and Barack Obama came back strongly in the second debate. So it's very much now anybody's race. It could go either way. Barack Obama's very strong, Mitt Romney's very strong. And because there's this great deal of uncertainty, in times of high financial uncertainty, people aren't really buying their shares, but they're also not really selling them. And as a consequence, we tend to see the market go sideways during this period. Virtually the exact same thing happened back in 2004 in the lead up to the 2004 election between George Bush in his second term, or for his second term, and John Kerry. Now, if we have a look back then, we can see that the market was going sideways for basically the entire year. They captured Saddam Hussein in late December 2003, and many believed at that time that once they captured Saddam, that the war would be over, the insurgency would stop, and the Middle Eastern countries would prosper. As we all know in history, of course, that's not what happened. The war dragged on, and it was in that first 6 months of the war in 2004 that the world, particularly Americans, realized that the Iraqi war wasn't going to be over once they captured Saddam Hussein, and that they were now dug into a war that was going to last years. And then leading into November 2004, the election at the time, of course, again, there was a great deal of uncertainty. Who would win? As it was, as we know, George Bush won the election. And because he won the election, say what you like about George Bush, the one thing he did, though, is spend like crazy. up until Barack Obama, he had the greatest deficits in US history, and he was spending, which helps to stimulate the market. And as a consequence, once he won the election in November 3rd, 2004, the stock market literally took off from that day forward. What do I think is going to happen in this upcoming election? I personally think Barack Obama will win again, and I do believe that if he does, we're going to continue to see the same going on. That is, continued growth in America, the continued upward trend of the S&P 500. If Mitt Romney wins, then I believe it'll be another period of 2 or 3 months of uncertainty, because it'll take that length of time for his policies to start taking effect and for people to then start to make the decisions. And we might then see the stock market either continue to rise or fall back down again. But if you ask me, my money's on Barack Obama winning another term. Now, one of the reasons for that is the improvement in U.S. unemployment. Now, U.S. unemployment now has fallen to about 7.8%. Now, that's the lowest it's been since before he took office. Now, there's no question he's had to deal with the absolute worst economic time in American history for the last 60, 70 odd years. And despite the Republicans determined to say that he's basically been causing the major dramas, I personally think he's been doing as good a job as he probably can, and unemployment is improving. It's nowhere near the 5.4% that he'd hoped he'd have by this time. However, it is making an improvement. And now that it's cracked back down into the 7% unemployment, things are looking better. If it can get down to 7.4 or 5 in the next couple of weeks or months, then that's certainly going to help the overall U.S. economy and confidence to come back into the economy. We're also seeing that happen in the U.S. government bond market. We can see how bond prices continue to fall. Now, what that means is money is coming out of the safe haven of bonds and likely moving into other asset classes. The S&P has been moving very strongly, albeit sideways for the last couple of weeks, but generally speaking, the S&P has been performing fantastically well for the last couple of months and years. Other markets, right? Crude oil. The crude oil price, we can see, has been quite volatile the past year or so. Having hit over $100 a barrel just a few weeks ago, it's now fallen back down to about 91 at the moment. In the last couple of days and weeks, it's been trending sideways, following that trend set by the S&P 500. Here's a broad commodity index. This index is made up of a variety of different commodities: crude oil, natural gas, aluminium, gold, wheat, etc. So it's a broad-based commodity index, giving us an idea of the overall commodity market. And very similar to the S&P 500, you can see how it too has been generally going sideways, particularly for the last few weeks and months. Now, this has then helped the Australian dollar maintain its value currently around the 104 level. Now, you're probably no doubt aware that the Reserve Bank of Australia dropped our interest rates in Australia down to 3.25%. And that is generally causes a weakness in the currency, causes the currency value to fall. However, even at 3.25%, it's still the highest interest rate of all the major currencies in the world. So even though it's been falling over the last year or so, the Aussie dollar is still strong, still sitting up around that 104, 105 mark. And so long as commodities can keep going sideways, that'll continue to be strength for the Aussie dollar. Now, one of the big perks, though, about a falling interest rate in Australia is the improvement that it's had on the ASX 200, and some belief that the Aussie dollar will likely fall back even further. So that has certainly helped our manufacturing and exports as well. So we can see that the S&P 200 Australian index has really surged, specifically in the last few weeks, now trading up over 4,500 points, the highest level we've had now for a couple of years. So that's a very bullish sign for the Australian market. So I hope you enjoyed this survey and this recap of the market. My name is Daniel Kertcher.